Hi, I'm Harry Morrow, Senior Investment Analyst at Loftus Peak.
And I'm Tom Gilbertson, Investment Analyst at Loftus Peak.
A slight switch up to the format this month, as Tom and I have returned from a 5-week research trip to the United States. We met with over 100 companies spanning financial services, industrials, internet, semiconductors and software, any industry where the potential for disruption exists, and attended the annual industry conferences of 2 portfolio software companies, but more on that in a moment. July was an incredibly volatile month, with a significant pullback in the share prices of many semiconductor companies. In fact, it was the largest and fastest correction in momentum companies in modern history. Even worse than the declines after the dot-com bubble burst and GFC, according to Goldman Sachs' US momentum basket, which plunged 37% during July.
In looking at disruption through the lens of tools, enablers, and beneficiaries, Loftus Peak has held a higher weight to semiconductors and cloud providers over the past few years, given the valuation support we had in those companies, and more recently, positive data points around revenue and AI uptake.
TSMC reported very solid results and upped its full-year revenue guidance from above 30% to slightly above 40%. ASML, maker of the machines that make the chips, also reported very solid results, lifting its full-year guidance about 10 percentage points higher than expectations. But back to the trip. It helped reinforce our conviction in a portfolio approach to AI across tools, enablers, and beneficiaries. We came away from conversations with management teams of chip companies across GPUs, CPUs, custom silicon, networking, memory and storage, the tools, with an understanding an AI spending cliff wasn't imminent, which stood in contrast to relatively low valuations and negative news flow.
On the beneficiary side, 2 software companies we believe are on the right side of disruption are Datadog and Samsara. We had the opportunity to attend their conferences while we were in the United States. Datadog is an observability platform for monitoring a company's IT infrastructure across applications, clouds, and AI models. Think of it as what your dashboard is to your car, the interface to see everything that's going on internally. Over the past couple of years, Datadog has built a range of AI remediation tools that can identify an issue and then work to resolve it by providing developers with a suggested course of action to remediate it. This substantially reduces the amount of human intervention necessary, and the impact on business operations is tangible. Fewer down hours and an overall better experience for customers means more revenue and a tangible ROI from the use of Datadog's products. Not to mention fewer headaches for developers having to unpick an IT issue at 2 in the morning. Samsara is an operations platform, enabling companies to coordinate their physical assets within a single system. Its business profile looks radically different from the typical software company. Its customers are in physical industries like construction and transport. It's built on the number of assets, not the number of seats, and it's selling into the operations budget, not the IT budget. All of these features reinforce our belief that Samsara is an AI beneficiary, not AI roadkill. Across these conferences, the main takeaway was the increase in product velocity that these companies were able to generate because of AI. Whereas in previous years, Datadog had released dozens of products, now it's releasing hundreds. Samsara's pivot into new verticals was enabled by AI crawling over its platform's 60 trillion proprietary data points.
At moments of significant change, we believe it's crucial to be on the ground talking to the companies that are driving that disruption. Our trip to the US helped reinforce our confidence in the AI infrastructure build-out in the short and medium term. And outside of AI, as portfolio manager Anshu Sharma discussed last month, we continue to diversify into key areas of structural disruption, such as China, batteries, and EVs, as well as life sciences.
This has been Update Plus. I'm Tom Gilbertson.
And I'm Harry Morrow.
Thanks for listening.